So we are back with Keith McLaughlin, and the previous episode or the previous interview with him, we just spoke about Purple Group and, where the current fair value is. If you haven't checked that out, I'd really highly recommend you go watch that. It was really in detail and a power knowledge session. And afterwards, we decided we're just going to have a look at two of his, he has a few favorite companies, but just two of his favorite companies at the moment on the JSE. Both of them are still a bit of, they're not the biggest companies on the JSE, and we're going to look at those two. So, two stock picks by Keith McLaughlin. What is the first one?
So the first one, and first of all, Hugo, hi to your guests, and obviously both of these stock picks are hold. So I'm biased and consider my opinion deeply biased. But so the first stock pick is Santova, and Santova is a 4PL, really a non-asset-based supply chain manager, which is a fancy way of saying it inserts itself into the supply chain without any assets, and it earns off the transactions there, which is hugely scalable. It's almost like a software business. And many years ago, Glenn started the process of moving Santova globally. And at this point, we're standing at a point, well, actually their last set of financials, they published basically 100% of their profit is offshore, and they still have domestic operations, but Santova is really a global player. Now, what's quite interesting about it, and one of the reasons, not one of the reasons I hold it, because that's fundamental, but one of the reasons I'm particularly excited about the next couple of months in it, is that Santova on a single-digit multiple, earning predominantly hard currency earnings from global operations, in fact, benefits from the high freight rates around the world at this point. Don't forget, if you're inserting yourself into the supply chain and earn a percentage effectively out of the transport of goods all around the world, the high freight rates, 10% of a low freight rate is less than 10% of a high freight rate. And hence, I'm expecting really, really strong numbers from Santova out soon. And in fact, we should see a trading update, hopefully in the next couple of weeks. All of that sitting on a single-digit multiple makes no sense to me.
Yeah, so, I've actually been following Santova for quite a few years as well now. Since I was in high school, I was actually been following them. And I had the privilege to also meet Glenn, and, he's an amazing entrepreneur and CEO, Glenn Gerber. And, one thing that I'll notice from Santova year after year is that net asset value is increasing, the revenues are increasing, the profits are increasing, but the share price is staying the same. Is that just because of a lack of foreign investors or big capital? Or, what would be the point of where the small cap company becomes a big company?
So that's a good point. In our previous conversation around Purple Group, you made a point, or I made a point, we made a point, that sometimes share prices run ahead of fundamentals. Sometimes the opposite is also true, and that's the opportunity, is sometimes fundamentals are roaring ahead and the market quietly forgets about them. So the share price does nothing until one day the market wakes up and you get a huge catch up that happens in the share. I mean, a share price can be flat for a number of years and then double in a year or two, or triple. And I suspect Santova may play out that way. What's kept it off the radar? Hard to say, but South African small cap sector has definitely been shunned. And that there may be some of that element there. Santova's model is also a little more difficult to understand. They're not a traditional logistics player. So everyone, when you say logistics, thinks trucks and ships, and they don't have any assets. They are actually, best way I view them is they're as a BPO, being a business process outsourcer that utilizes technology and global supply chains. I mean, it's a totally different model and a totally different way of looking at it that makes them a bit more complicated to analyze, so that the guys that look at them perhaps don't look at them correctly. So good question. I don't really have a good answer for you, but I'm quite comfortable holding them where you've got the fundamentals all moving and charging across multi-years in the correct direction, and a share price that's absolutely undervalued. Interesting enough, one of the arguments I've heard guys say against Santova is because it's small. That's why it's not very investable. But if you take Santova and you apply some of the global multiples found in other 4PL players, and you apply it to Santova, it's suddenly not so small. It's a multi-billion billion rand market. Well, it should be a multi-billion rand market cap. So the argument that it's small and the argument that it's cheap are all very intertwined. And it's a bit of a chicken and the egg scenario. Either which way, at some point it's going to play catch up, and I want to be on the right side of that.
Yeah, and I mean, when you say it's small, so many times people wish, if I just bought Capitec when it was small, for example. So small is not always.
But those exact same people wouldn't have bought Capitec because it was small.
Yeah, and they had to be patient. So I think Santova is definitely. I think most small caps that has a lot of potential on the JSE is for long-term investors, and you'll have to be able to hold through ups and downs through whatever it is. And if you just look at the industry that Santova is in, there will always be a demand for it. We are living in an age of trade, and that is just ever increasing. So I personally also like Santova. And I think I'll also probably increase my position in Santova. So that was your first pick. Let's get into the second one. Before we do, just once again, this is personal stock picks, and this is not financial advice. So into our second stock pick, which is
Masterdrilling.
Masterdrilling.
Yeah, I do like Renogen as well, but that's a conversation for another time. I mean, in terms of this format, I hold, and I very much like Masterdrilling. Now, if you think, just stand back from what Masterdrilling does, if you think around the world, the tailwinds that are in the commodity space are really that the demand is ever rising, and the commodities themselves are always getting deeper underground. Because as we mine out the world, we have to go deeper underground to get more commodities to satisfy the demand. So what Masterdrilling really does is they have a globally dominant fleet of raised bore drillers that they've spent huge amounts of money making this fleet world class, a ever increasing amount of automation in this fleet. Because by the way, everyone talks about automation potential in mining, but who's actually doing that automation? Well, Masterdrilling is at the forefront in terms of automation, automating around drilling, and it allows them to capture these tailwinds, earn wonderfully off them, and in a spot insensitive and a geographic insensitive way. What I mean by that is they're globally diversified, and their fleets being mobile is on many different mines across a range of different commodities. So really, as a globally dominant business in an absolutely important niche that offers really world-leading technology, why is Masterdrilling trading on a single-digit multiple in South Africa? It makes absolutely no sense, particularly given these tailwinds in the commodity market. Then in their last set of results, what we saw was their order book rise by multiples, and the order book leads the revenue, and the revenue leads the cash flow, leads the returns. So everything is heading in the right direction with Masterdrilling, and yet the market still seems to be sleeping on their stock.
Yeah, and they are also very, very much globally diversified. I actually had a look the other day on where in all the countries that they are in, and it's just amazing to see how wide they are diversified. And if they land a contract, it's usually sticky contract, because it's 2-3 years, maybe 5 years that they sign with a mining company. So we've actually written 2 stock picks on Santova and Masterdrilling on FinMeUp before, so it's actually great, and they both grew recently. But from both companies, would you say it's long term? Like if you buy, it's more like a buy and just hold, like forget about it, or is it buy and just always be on the lookout?
So my methodology is to exit when the fundamentals move against me or when the valuation is ludicrous, so that there's more downside risk than upside risk anymore. And in both Santova and Masterdrilling's case, the reason I'm buying is still intact, and I don't see that changing anytime soon. So these are the sort of companies I like to buy that I can, and obviously keep your eye close on them, each set of results, check that everything's moving in the right direction, and check that the fundamentals, the reason you bought, is still relevant. Because if it is, and the valuation remains reasonable, just let it compound. Let the story carry on playing out. It's when either the valuation gets ludicrous, or when the fundamentals just like this, the reason you bought is no longer valid. What I mean by that is, I'm buying Santova as a global 4PL logistics play. So long as they carry on gaining market share, they carry on leveraging their core, they carry on growing, all these things are relevant. And when if Santova suddenly turns around and starts buying a gold mine in Ghana and investing in a factory in India, you go, whoa, this is not the reason I'm buying this. I'm buying this as an asset light, superb business model that's really like on a competitive scale, can compete globally and is absolutely doing that. If that remains relevant and Glenn carries on in this careful capital allocation, growing the business, then the story's intact, let it compound. Same with Masterdrilling. Masterdrilling is a absolutely unique industrial technology play. So long as they continue to do what they do, and they continue to grow into countries, grow their fleets, picking up market share in terms of the mining sector, and continue to operate in an absolute unique way, let the story carry on playing out. If they were to suddenly go into a totally different line of business, that's a red flag. You go, what's happening here? or they stop investing in their fleet, stop investing in their technology. You go, so let the story play out. Let the fundamentals play in your favor, and so long as the valuation remains reasonable, this is both of these are good compounders.
Yeah, and both companies are more business to business plays, which is more sticky, and which is why a lot of venture capital investors like business to business startups as well, because it's so sticky. So with both companies, if they just keep innovating, keep doing what they're doing, that it's likely that the revenues will grow and the client base will grow and all of that. So, and it's either Warren Buffett or Charlie Munger that said the share price will always catch up to the business. Not necessarily the business to the share price, but the share price will catch up to the business. So, both companies are probably for long-term investors unless the fundamentals change. Thank you so much, Keith. If you want to add anything else.
All I was going to say, really, to agree with the comment around fundamentals, is I almost view fundamentals as gravity in the market. And share prices can run above them or below them, but in the long term, fundamentals act like gravity, and they pull those share prices to where they should be. So long as the fundamentals are in your favor, you're on the right side of the investment, probably.
Yeah, that makes a lot of sense. Thank you so much for your wisdom and knowledge, the two stock picks, and all the knowledge that you shared regarding that. Thanks for watching, everyone. Hope you enjoyed this. Please consider liking so it reaches more people, and subscribe for more like this. You can also follow Keith on LinkedIn, on Twitter. We'll also put his name and surname in the description, as well as the link to the FinMeUp channels. I hope you have a great day. Thank you so much, Keith.
Perfect. Thanks, Hugo.